This that
Red Panda Anthem.
Ian, what's up?
This that Red Panda Anthem.
Red Panda, what's good?
Red Panda Anthem.
Now, Ian, I want to talk on Datadog because that was one of those companies, especially during the pandemic, that we traded on and did pretty well on. But obviously, it's pulled back. I think, like right now, I'm looking at it at 60. It traded at, well, it closed at 65.94 today, which is far cry from where it was at. But the cloud space, right? Most people think cloud computing, but Datadog is really like in that cloud monitoring. They were talking about, and I was reading a few articles about it. It's an interesting space because there's so many companies that are doing it, but how do you differentiate who's better, right? Like, because Amazon is in the space, they have an Amazon Cloud Watch, and I'm sure Microsoft with Azure has a cloud service. So it's like, do we try to find these not even makeshift, but these newer companies that are in the space, which makes it even cloudier, all pun intended, or do we look for a company like Datadog or Dynadance or something like that, where it's
you gotta go with the original. I ask the ladies, you want Drake or you want fake Drake? Puerto Rican Poppy may get it done for one weekend in the Bahamas, but you want OVO Drake, right?
fake Drake disappeared.
He got banned.
Yeah, they banned him.
Tough.
And Swervio, I think Swervio too.
Datadog for the streets. Let it go.
Let it go. Okay.
Good trade. I would trade it to the downside. I would short it, but I would not invest in it long term. I mean, I keep saying American exceptional, and one day maybe we should have a talk about capitalism and how it has failed and bankrupted the country. But we cannot name 25 exceptional companies in the United States of America.
Right.
We're just going off gross revenue. Kudos to the staff and management team at Datadog, nothing personal. Just right now as a stock is not something I would want to invest in. And my framework is always, would I put my life on the line for it? My child's life on the line? No, if that's the case.
It goes back to that competitive moat, right? When I was looking at it, I'm just thinking of like from a competitive moat, what separates them or keeps them away from their closest competitor in that new space? And I can't really find the answer.
There's nothing there. And there's other companies just that are low-hanging fruit like PepsiCo that are better because you're not competing against sector, you're competing against the entire field.
Right.
Like Cardi made her statements on inflation. And I told people a year ago, Cardi get mad and do a little investment segment. Boy, it's gonna be tough. Like everyone is your competition. So no, I wouldn't touch Datadog. I will leave them alone. And if a company isn't like top 10 overall and definitely number one in their space right now, I wouldn't touch it. Even if you're trading it as well. Because you may get a great pop, and I know there's some stocks that are low float right now. We'll talk about Bed Bath & Beyond later. But if a company's value is too low, the probability of it going out of business is too high, and you don't want to be caught with your calling your broker and saying, "Hey, can I get my money out of this? I can't liquidate." It's not worth it. It's not worth it.
It's really not. It's really not. All right, let's go into this one. When is a clear signal that the recession is over and the stock market should see a bull market? Or a stock market will turn bull. When's the recession going to be over? When's the signal for the recession that is over, and what's the signal that we're going to see bull market?
Yeah, that's a great question. Number one, when the Federal Reserve stops hiking rates. So even if they pause, that's not a good enough reason. They have to stop raising rates. Number two, whenever that yield curve stops inverting. So I want everyone to put in chat in real time to do the homework. What is the most important yield curve in the bond market to measure if we have a recession? Because I want to make this more interactive this year. And if you pair two of them together, that's why I say if you trade stocks and bonds together, I talked about it on episode 70, you will know exactly where the market is going. The funny part is now when the yield curve inverted this time, the bond market fell apart with it at the same time, which normally does not happen, which leads me to the lessons that you have to always do your own research and do. And any conventional wisdom does not work when there's a black swan event. So you have to be prepared. Like even indexes, if all indexes fell at one time and the entire bond market fell and tech, what would you do? You have to prepare for the worst case scenario. For me, I was short all three, and I would never open up my TD Ameritrade and look at my long term until the carnage was over, right? But yield curve inverting, interest rates, and then once again, I'm keeping my eyes peeled to see when China will boom. I know they're reclassifying some of the COVID deaths to kind of play with the numbers. But if I see like K-Web and Alibaba start to go up and we have a monstrous run for like a quarter or two, then I'll know that the recession is over. Maybe we will have a short-lived recession because there's some politics behind the scenes that are stopping them from announcing it. Maybe it will be short-lived, but the Fed has to stop raising interest rates and that yield curve has to stop inverting, and then we'll be clear.
Yeah, when we spoke, and if you're not familiar with the language of inverted yield curves and bond markets, when we sat down with Steve Leisman maybe 2 or 3 months ago, I mean, he gave a absolute masterclass on exactly how that works. But when we spoke to him, one of the things he said is about when they were going to stop raising rates, and everybody had estimated that March would be the time, and it'd probably get up to about 4.9%. And now I think they've changed that maybe at 5.2, 5.25%. So we'll see within this first quarter if that is true, and indeed we will see an end to the raising of the rates.
So, all right. So, should people be buying stocks right now?
Yes,
or they should be buying stocks.
2 tech, 2 index. First, buy index funds. For those who don't know, and I've said it before, indexes are an all-star team. They put the best companies on the planet inside of one basket. Set it and forget it. What I don't want us to do this year is overanalyze and not take enough action. Because if the net worth isn't increasing year over year, the share count isn't increasing year over year, all the information in the world does not mean anything. Now we are back to bully ball in the market like how it was 1994, 95, 96, 99, 01, 05, 07, 08, 2013, and 2014. The companies that are really great are amazing, and the ones that are in the middle of the road or just floundering around are getting destroyed. You can only invest in quality. And we see inflation. And for the favorite book on investing, Money Master the Game, please go read it. I know it's thick, but man, there's tons of gems in there. During every 10 or 15-year period, you're going to have an increase in inflation. You cannot outrun inflation. Even for my entrepreneurs, yes, you can make a lot of money for a 5 or 10-year period, but at some point, you're going to have to learn how to replicate yourself. And one of the best things that entrepreneurs can do is to put their capital from their business into companies that are better than them, ran by better management, so you can then not have to hire as many people. And if you don't invest, inflation is going to continue to creep up and kick your ass on the back end. So if inflation continues to be 6, 7, 8%, and you're going to get 10 to 12% out of an index fund at the prices in which I call, you have to have your money working for you. Please put it in chat. The job of your money is to have your money working for you to make you more money, babies.
So people should be currently investing, even though the stock market is probably going to go down. It's just
the best time to buy. Everyone wants to buy it at the top, and that's the wrong time to buy.
Invest in index funds for the long term. Should they be investing in ETFs?
Yeah, if they're quality.
Quality.
I'm Vanguard biased, but
is QQQ a quality ETF?
Yes, but you're going to have more drawdown with QQQ. Yes.
Because it's tech heavy.
Tech heavy, yes.
Is XLY a quality ETF?
Yes, but I don't like a lot of the spiders are okay. I like Vanguard just because of how much control they have in the market. Like if I can actually, like, would you invest in the, let me keep it clean. If you can invest in some of the founding families and founding companies of the United States of America, would you do so? Everyone would usually says yes. If so, then I would focus on Vanguard. The spiders are good. XLY, solid, but I'm VOO, VTI, VGT, which is the tech index, is all you need. Sometimes we make this so complicated. It doesn't have to be. And of course, when you're in the middle of the storm, it feels like sunshine is never going to come when it's raining on you like crazy. But for those of us that have been through 2007 and 8, and if you missed any other crashes before then, 2 years later, you're always like, damn, I should have put everything into the market. It's scary while it's happening. But yes, you should invest in the long term. Minimum 5-year hold.
And even when you're down, put more money, dollar cost down. Dollar cost down. If you're down 20% on your portfolio on the S&P 500, put more in. and then you will be down maybe 10%, 15%. But the whole idea is to hold it for a long period of time.
30 years ideally. And then also too, if you're buying at the right prices, you shouldn't be down that much. There can be some bleeding, but if you're waiting for the right prices, especially like these decade level kind of lows that we've had, you shouldn't be down 40, 50%, 25%. But nonetheless, the number of shares plus the length of time invested is going to give you a lot more freedom. And I know it's scary. And I know some days you don't want to look at your portfolio. But this is the one thing I want to tell every entrepreneur and everyone that wants to be rich. The person that sticks to the plan the longest usually wins the most. Everyone can have a hot, year or hot 3 months. And this is why, we even talked about it behind the scenes, like even with the show, like I never led based on whatever the topic was. I always went based off principle. Because if that was the case, like last year would have been all about NFTs and crypto, and the year before that would have been all options. Like when you go study the entire history of an asset class, private equity is going to get banged up this year pretty bad. But if you invest in private equity and hold some quality companies, SpaceX, and you hold it for a few years, you'll be A-okay. This is a game that goes to those that are patient and that can hold for half of a decade or longer. And it's not fun. But when you get freedom and you're able to provide for your family without thinking about it, it is a hell of a feeling. Please, everyone, put in chat, I'm here for the long term to get rich. We can't talk about generational wealth and we're scared to hold for 4 or 5 years. It's impossible. It is impossible.
This that
Red Panda Anthem.
Ian, what's up?
This that Red Panda Anthem.
Red Panda, what's
This
good?
that Red Panda Anthem.
Your
Whole
boy.
clique going up. I know they can't stand it.